Hey guys, so how's everyone doing? We are about to start our meeting right now. Yeah, so it's been a while, a couple of weeks, give or take. That's because some of us were having exams. We had to now do, sorry about that. Some of us were having exams. We also had to now do restructuring of the whole company as a whole. So we're about to start, and I'm going to dive into analysis, right? In the sense of last week's analysis, because I posted on our channel, right? I posted the results and also a trade on gold, and I want to also give back data on how we got that as well. But some of them were complaining, like I think we had one angry reaction, and that's because maybe I didn't post the actual signal as per in values, because I had this mindset that most of us that were in the channel already have an idea on trading, which is my fault. From henceforth, all the analysis will be based on actual figures for you to impute so you can follow through, right? We're not doing any more VIPs, we're not doing any more of that. No. Follow our YouTube channel, go to our Telegram. I release signals there, I release videos on YouTube, sharing it to Telegram, right? If you want to enter the mentorship program, our website is open for that. Also, there's someone you'll be referred to on the Telegram as well. If you want to join our investments, there's someone that will also be referred to you on the Telegram as well, right? So that is the current system that we have in place. That is, Mondays to Fridays, we are to post a YouTube video as to what the market is doing this week, and also post signals, in the sense that when I make profits, you make profits. When I get losses, you get losses. Transparency, guys. Transparency. Even last week, I posted on Friday an investor's account that I traded and the profits I got on that. I'm not supposed to do that normally, but I did that to encourage all of us so that we know what we're doing, okay? Now, this week as well, I'm going to be posting signals and also Monday, Fridays YouTube videos, educational materials as well. So let's start, shall we? Let me share my screen. All right, so I'm going to go to my trading view right now. Yeah. So gold. Gold is still playing out the way I expected it to, right? But we're going to just give a rough outlook on Euro USD, then on gold, right? So now Euro USD from the weekly, I made a comment on this on our last video. This is our consolidation zone, accumulation, manipulation. It broke out from it, right? It broke out from it. Let me just highlight that. It broke out from it here. This is our manipulation phase. And right now it has broken out. Then it now broke out of our manipulation phase up here, giving us a distribution phase. So we're expecting up movement on Euro USD. You get, from the 3 months previous videos that we released, we're already looking at buys. So Euro USD was just inside the consolidation phase, right? That is accumulation. Now it has done its manipulation. That is the temporal breakout, taking out all the buy stops that might be here. I use this to indicate the buy stops that might be here. Now it's also going through a distribution phase right here. That's why we see this impulsive leg, this impulsive movement of buys happening right now. So Euro USD is bullish, right? Overall bias of Euro USD is bullish. So now, since the overall bias is bullish, then I will go to my daily time frame. To the glory of God, we were able to see the overall bias videos before this current video, and we analyzed all of this already, guys. All of this has already been analyzed on our previous videos. So mind you, go and check it out. Our previous videos has all of this inside of it in our YouTube channel. We already analyzed all this and it played out exactly, right? So now this is where we are. This is the manipulation that I spoke about just a few seconds ago that happened. This is our manipulation that happened. And then it also gave us a distribution right about here, right? The distribution phase is going all the way. I believe it's going to go all the way to 1.12755, but so as to not to be greedy, I'm going to put it on this resistance zone there, right? So that's 1.11061. So I'm expecting bull movement all the way up there. So now, just because we are expecting bullish, that does not mean that all throughout is just bullish all the way. That doesn't mean that. Now, just because the market is saying, okay, bias is bullish, understand that the market can't just be going up. There are going to be retracement legs, and it's the retracement legs that we enter on. It's like a river that is flowing, right? There will always be junctions where the river is either going to be steeping high or steeping low, right? For example, now if we're on a waterfall right now, right, there are always going to be some few bumps, right, where you'll be seeing some discontinuity in the waterfall. Same thing as well in trading. So now imagine if this is our waterfall, right? Waterfall, a small bump. We call this bump either a pullback or a retracement. On a higher time frame, it's called a retracement. On a lower time frame, it's called a pullback. So then it now goes, continue, waterfall, another retracement, waterfall, right? So now that's how the market usually flows. So now the market has given us its what? Waterfall, pullback, waterfall, pullback, waterfall. So now we are expecting a pullback to continue the buy all the way up here. That is our expectation. So I think that is our expectation. We have to go now with, I acknowledge that we have passed the phase of manipulation, right? We finished the consolidation phase that was represented by these two resistance zones on the weekly. So now we're now done with the manipulation phase, right? That's taken out all the buy stops and sell stops necessary. In this case, buy stops. Gathered up the liquidity and now pushed all the way up, right? So now, currently speaking, the market should be doing a retracement up of here. This is where the retracement is, right there. The market, as you can see, we have weak resistance there. Weak, W-I-C-K, weak resistance there, right? That means the market is trying to get a retracement done, right? So now, most traders will say follow the trend. So you wait out the retracements to happen, then you wait for it to break out. For example, now, if this is the zone I'm expecting the retracement to happen, right? Once the market does what it do, right? It just does it, and it breaks out of this zone, I can enter my buy all the way up here, right? I can do that. It's possible to do that. Like I said, it's going to be all the way up to here. Not to be greedy, but then overall, I'm expecting it to get to here. Good ratio 1-2, right? But now, for those of us, because we just saw it right now, that this is like 100 and something pips to get 300 and something pips, right? Now, the reason why we apply SMC, right, is so that we are able to get a proper risk to reward, basically to fine tune our trades. So now, if you notice, how I trade is that by the grace of God, I combine the knowledge that I have both on retail and SMC to give me my desired results, right? Even if I go from the 3 months, let me just backdate it back to the 3 months. Yeah, I applied some retail key levels over there. There's some support and resistance and everything. Then I now went to my weekly. Then obviously we both know that this is obviously, what is it? This is called a consolidation zone, where we understand from SMC knowledge that this is what we call an accumulation. That's giving us a manipulation, like I said. Now we're in the distribution phase. So now on the daily, I take note of that knowledge, right? I don't discard it. It's part of the system. So now, meaning that I'm in a sell to buy scenario, I go to my 4 hour time frame. What is the market showing me? The market is showing me that yes, indeed, we are on a sell to buy scenario. If you look at it right now, this is the zone that we're looking at, right? We are seeing wicks. Weak rejections indicate that we are expecting sells, right? Now, most people can say that, okay, you can draw your fib. We draw our fib from this point to draw a fib from this point to this point, and they'll be like, okay guys, once it breaks out of 0.5, that's when we'll be expecting, we've entered from a discount, from a premium to a discount zone, or from a discount to a premium zone, right? But that's not necessarily true, because most times the market doesn't get to this 50 unless we're looking at a deep pullback. And I don't think this is going to be a deep pullback. Reason is because we have a lot of bullish momentum from here to here, right? So I don't think it's going to be, we have a lot of bullish momentum from here to here. So I don't think it's going to be a deep pullback. So what I'm thinking is going to be a pullback, right? So my aim is when the market retraces down past this 0.23, right, I'll start looking for my buys, right? The 0.23, 0.38 are usually the best zones if you're looking for retracements, to give a valid retracement. Now, when you now see a deep pullback, that is on the 0.5, below is 0.5, right? But like I said, since the momentum is this much, I don't think it's going to give a deep pullback. So now waiting for the market to go below that 0.23. Now, coincidentally, right, interestingly enough, it actually matches with the inducement. What do I mean by that? Because this actually is the last pullback, the last minor pullback, right? So this is our inducement leg. So I think that's our inducement leg. It's only natural that, okay, I'm seeing some reasons as to why I'm expecting a sell to here. Now, if you are following the trend, do not sell, right? I advise people, if you're following the trend, don't sell. Or if you are to sell, then if you normally use a one lot size in your trades, then do half of your lot size is 0.5, right? So now, what am I expecting to see? I'm expecting to see a pullback all the way below here, most likely to mitigate another block here or another flow. We'll see that on lower time frames. Then from there, right, then from there, something like this, all the way up to there, right? Now you can choose to wait for the retracement length to run its course, right? Because like I said in previous videos, everybody likes saying other blocks is imbalance, break of structure, liquidity. Those are the fundamental knowledge. If everybody knows it, then be sure that that's not all they are using, or else everybody would have been making multi-millions from trading. Meaning that there is some other reason as to why it's mitigating that other block or other flow, right? Do we know the exact reason? No. That's why it's called institutional secrets, right? So, by the grace, we have some fundamental knowledge on it, true, right? But the data knowledge, we are not exposed to it. So what do I mean by that? We can identify a breaker block. For example, now this, for this trade I took here, for that buy, this is a breaker block. We can identify, we know what a breaker block is, we know what an IFC candle is, we know what a single candle order block is, we know change of character, we know these things. Good that we know these things, right? Good that we know these things. Does that now mean that it's Hail Mary from here? No. It just means that compile all the knowledge you have on ground and work with it. So now, like I said, we're expecting a pullback pass here. I won't enter this trade unless it breaks to this. If it doesn't break this inducement, that's at 0.23, or even go below to even the 0.3, it's very possible that it does that, right? It's very possible it does that. As long as it mitigates an order block or an order flow that gives it an impulsive break to cause that movement, sure, why not? But if it doesn't and it just keeps going up like this, right? And it just keeps going up like this. What do I mean by it just keeps going up like it just goes like that, right? It just goes like that. Then that is when you can now start telling yourself that, okay, we actually have to go back to the drawing board, because the market didn't go below this zone. It instead formed another inducement, meaning that it's not going for the major inducements, it's going for the minor inducement. The minor inducements are what are found in lower time frames. So now this that we just marked out right now is a major inducement, right? So like I said, I'm expecting the market to go below this, right? Expecting the market to go below this. When the market goes below this, then for sure. But then in the situation that it forms another inducement leg, that means the market is not looking for the major inducement. It's obeying the minor inducement. So now, let me go to lower time frames. 30 minutes. I mean, why not? So now let's delete that. Now the 30 minutes, this is what we're seeing, right? Now we have a resistance zone here. Support to resistance, if I'm to be honest. Yeah, support to resistance zone here, right? I notice it formed the W pattern here, right? 1, 2, then it broke out, then it's coming back to retest it. So most likely, all things being equal, it can just from here go up. Sorry, it can just from here go up. From here go up. All things being equal. That means it's not obeying this major inducement that we marked out here. It is instead following the minor inducement and going all the way up. But in the situation that it breaks this support to resistance with an impulsive bearish candle, then be sure that it's going all the way down to here. Then most likely this is our zone of order flow here, before we now start seeing the up movement that we desire, right? So what can we take out from this, right? What can we take out from this? Patience. Sorry. What can we take out of this? Patience. Patience is what we can take out of this. Clearly we are seeing a support to resistance play out. Clearly we know that we're on a retracement leg. We don't just know how long the retracement leg is going to be, right? And we are seeing on the lower time frame a support to resistance play. Or rather, a support to resistance play. Or rather, should I say, this is R, this is a resistance to a support. A resistance to a support play out. Now, if it breaks out of this resistance to support with a bearish engulfing candle, right? Then be sure we're going to follow this one. That is going to sell all the way down to our order flow zone here, and then from there we're going all the way up. But if it respects this resistance to support, right, then it's just going to keep going up. So what do you believe we should do? Like what am I saying we should do? Patience. Now, if it respects our resistance to support, what I'm going to do is this. This is obviously a minor resistance there. What I'm going to do is this. I'm going to wait for it to break out of this minor resistance. Then from there, I will just put in my buy here, stop loss below here, right? That's 60. Let's make it 70 pips, right? Let's just make it 70 on the dot. 70 pips there. Then I'm going to put a TP all the way up to here. This is a ratio 1 to 3. That's 200 pips for 70 pips. If you're using a 0.1 lot, that's $70 for $200. If you're using a 1 lot, then that's $700 for $2,000, $2,300. So like, it's the patience game we're playing out. We're not going to rush. We're not going to do that. We're going to be patient and see what the market gives us, right? Now, if the market, that's for this play out, it obeys the support to resistance. The resistance to support, sorry. Because this is a resistance here and this is a support. But if it disobeys it and it breaks out of it, then obviously we're going to sell all the way down to this zone. Let me just mark out the zone. So this zone that we have here, sorry. Okay, yeah. So this zone that we have here. Then from there we buy all the way up. If you notice, we even have an IFC candle inside this zone here. That's our IFC candle here. If I'm using terms that you are not familiar with, then I'm speaking as from the knowledge of our SMC students and ICT students as well. And also we have, this is a breaker block that is up here as well. So to be on a good safe side, we just take the whole thing. You can put your stop loss below here. Right, you can put your stop loss below here. Entry on it, put your stop loss a good distance below it. So let's just see, give it a 60. Then your TP, first TP can be here, but then overall TP should be here. Right? It's that simple. No need to class it ratio 1 to 6. It's beautiful. But like I said, right now we are playing the patience game. The patience game. Okay? So now we're going to now move to gold. Gold, guys. Gold. Right? So I noticed this consolidation on gold. So basically, this, what's it called? Accumulation, distribution, manipulation happens below, which the market is currently doing. The market is giving us the manipulation that is happening right now, taking out all the buy stops that we have here before we now see a distribution all the way up. So right now, gold is selling, but I'm not entering this sell. The reason is because my overall bias is bullish, as we've seen. The overall bias is bullish. Overall bias is bullish. All right. So that's that. Overall bias is bullish. Right now, it's just giving us, well, it's currently getting to the manipulation phase where it takes out all the liquidity needed before it keeps going up. So if you want to enter gold for a short-term sell, why not? You can enter gold for a short-term sell. But I'm not doing that. All right. I personally am going to wait for that bullish pull up. It's taking out the liquidity. If you notice, we're seeing some weak rejections, meaning that we'll soon start seeing the bullish movement happen, right? I marked out here. I marked out this place because this is a liquidity area, right? There are resting orders there. If you notice, this is also a minor triangle formation that we have here, right? So the market has already taken out the sell stops that are here, so it's remaining the buy stops that is sorting out. So when it takes it out, then among these other ones that we have here, on this our resistance, then we're expecting it to go all the way up, right? So now, what am I saying on gold, right? So previously on gold, It's always good to start from higher time frame. It's always good to start from higher time frame. Or else you confuse yourself. Gold daily has been on a buy, guys. Gold has just been hitting buys throughout. From this point, right? This way is weekly analysis. If you go to the weekly time frame, I analyze the weekly time frame for all that. So from this point forward is the daily, right? So then on the daily, clearly as we can see, gold has just been giving us buys. Yeah. We were here last week. We made some good money from here. Some amazing amount of money from here. I'm just going to put this just for the sake of extract information, right? But like gold has just been giving us some good money, right? We didn't post this one, right? But this one was on our channel and we made so much money from all these movements. So now where we are here, right? So now, this is our last pullback inducement here, right? So go to my 4 hours. My 4 hours is a change of character. That's what makes this interesting. On my 4 hours, that's a change of character. Yeah. Wait, let me be sure. Oh no, it's not. It's an inducement. Nice. So this is an inducement, right? On the daily, this is meant to be the other block is supposed to follow. But if you refine it, it's going to be this, right? But I don't see the market dropping all the way down to there, right? That's what is called oversold. And in a situation of an oversold market, it tends to just convert to being a selling market immediately. So I don't think it's going to do that, right? It's already marked, it's already mitigated this IFC here. You ask me why did it follow this one, right? This is a minor break of structure here. If we're using our fundamental rules, this is a minor break of structure here, right? Does it have an imbalance? It does not have an imbalance. Okay, but it's an IFC candle. An IFC candle doesn't necessarily need an imbalance to function. So that's scrapped out. But it obeyed this IFC candle and it went all the way up. Now it's giving us a consolidation phase, which we are currently now in the manipulation. Then after the manipulation, that's when we enter in for a sweet distribution all the way up. Right? Now, it's the same thing over here as well. Right? This is what is called a consolidation, right? It came up, took out the liquidity that is here, give a small manipulation before it now distributed all the way down. It's that simple, right? This is the consolidation, came up like this, took out the liquidity from this previous leg here, took out the liquidity and gave a small manipulation and came down, mitigated the IFC that took out this previous liquidity here, then we distributed all the way down. It's that simple. The manipulation was from here. People must have what is it called? Buys. Sorry, there were sell stops that were here, right? So the market took it out, forming an IFC, right? A manipulation, of course. Then from there, distribution all the way down, taking out all these buy stops. It's that simple. Then obviously this is an order block, rather an order flow. From the order flow, we have this is our liquidity takeout. IFC formation, order flow, making the order flow even more valid because it has liquidity being taken out on it. Mitigated, continued selling all the way down. Right? So now this was meant to be a breaker block to continue the sell, which it disobeyed. But at the end of the day, it still obeyed this because that's what is currently giving us sorry, mistake because of this. Yeah, so that's what is still giving us now. That's what is still giving us this consolidation that we have right now at the end of the day. So like the breaker block that it did not obey, right, to continue the sell is what is giving us this consolidation. That's what's causing this consolidation to happen right now. So either ways, it still works. Right. Let me just take it back to here. So now, like I said, this is what gold is doing basically right now. Currently is in the manipulation, but then since gold is buying overall, I'm waiting for this distribution to happen. The manipulation phase is here. This is the manipulation that is happening, right? So now I'm waiting for the distribution to happen. That's what I'm waiting for. The distribution. It's from the distribution that I'm going to enter into gold. Most likely I'm not even going to buy it above the current high, somewhere like here. So yeah, that's what is currently happening on gold. And our trade on gold on Friday was this pump, was the pump from here to here on this consolidation. We took this trade, I called it, posted it, although some people were a little bit annoyed because I didn't put in the exact figure, because I had this mindset, like I said in the beginning of the video, that I was dealing with just traders. But I just remember that, okay, there are also people in the community that want to partake with us as well. So I'll be putting in the exact figures right now. So if you want to sell gold, you can actually sell it for this manipulation phase, but use reasonable lot size. You're going against trend, right? All right. Have a blessed one, guys. So that is it from me. That's it from me, right? Have a blessed one, guys. So that's it from me. Have an amazing one. Analyzed, explained. You can join our Telegram channel. I'm going to just show that right now. Right? I'm going to show that right now for the sake of emphasis. Okay, this is our previous community. We're trying to move them to the actual main operations, which is here. Yeah. So you can join our Telegram channel right now. Right? The link is actually in what is it called? Sorry, my mind is drifting. The link is actually in the description channel on our YouTube page. This is our last trade that we took, right? If you notice, everything is recorded, right? If you also notice, I took the trade. This is on my phone, the results on it. If you notice, 3 months ago, deposit is there, profit is there, swap is there, balance from our previous trade. Then current trade, got the profits that are there. That buy that I said that took place on Friday, we closed all our positions, and that's our current profit in. This is on an investor's account. Obviously, I won't show his details. I just showed the profits, showed the swap, showed everything so that they can be understanding that, okay, this is actually a live account being traded. All right. So that's it from me. All right. Thank you so much for sticking to the end of this video. Please check the description box. You will see our website, you will see our Telegram channel. When you get to the Telegram channel, view our messages, view our testimonials. If you want to reach out to us, there is a medium to do so on the Telegram channel, right? Check it out. Also, I'm going to put a medium as to how to reach us out on our YouTube as well. We also have a website you can also reach us out to as well. So, like, in all, we have your best interest at heart. Make money, understand how to make the money, right? And how to multiply the money. If you want to invest in us, right, in the sense of you want to invest, let's say the investment range is from $500 to $5,000, we give an 80% return by the end of the year, right? We give an 80% return by the end of the year. That's simple. If you give us $500, 80% increase of $500 over giving you at the end of the year, and we guarantee your capital 100%. If it goes south, if anything goes wrong, be sure your capital is in check as well. Isn't that not mind blowing? You don't find that anywhere else. There's a reason why we streamline our operations from $500 to $5,000. So that way, if anything goes south with any of our customers, which of course it will not, because our win rate is very good. So, our win rate is above 80%. Though this is the market we're dealing with, so you also have to prepare yourself for contingencies. So in the situation of contingencies, or in the situation if anything goes south, right, we already have you in mind as well. So that's all from us at Trade with Mars. Thank you so much. Like if you loved it, share if you enjoyed it. Take care.